All right, order flow. So, a beautiful topic. Now, order flow is at the core and at the basis of everything that I do and that I teach. So, order flow is the most important part of my trading plan personally, and in the future, your trading plan as well. Order flow is very, very, very important to understand. So, first off, the thing that we need to go over first is we are now going to zoom in more. What I mean by that is not going down time frames, not that type of zoom. But what we are doing is market structure was more so zoomed out. So we had our chart like this and we had huge lines, and we can see we are taking a lot of candles into account because we're moving from that intermediate term low to that intermediate term high to that intermediate term low. We're taking more candles into account, right? And if we zoom in more, and what we talked about yesterday as well, the short-term ranges, that is more so order flow. So we zoom in more on particular candles. That is part of your order flow. Now, first we need to understand the definition of order flow itself. The definition of order flow is if we have bullish order flow, then discount arrays are holding. If we have bearish order flow, then premium arrays are holding. Now, I can already think, or I can already hear you think, when does order flow switch, etc. Like, go over these things. Don't worry, I will. So, when does order flow switch? Previous lesson in the market structure video, we went over STs. STs are when we are coming off of a PD ray and we have a displacement in and displacement out. Now again, displacement equals fair value gap. So whenever I talk about a displacement is a fair value gap. Whenever I talk about a fair value gap is a displacement to either one side of the market, because a fair value gap happens to either a bullish side or bearish side. So whichever side that fair value gap is on, there's a displacement towards that side of the market. So if we have a bearish fair value gap, then there's bearish displacement happening. So it's equal. It's the same thing. I need you to understand. That's crucial for you to understand. Displacement is a fair value gap. Whenever I refer to displacement higher, I refer to a fair value gap higher. That's how we define it. That's our mechanical step. Displacement is fair value gap. All right. So we have our imaginary discount array. Again, I'm just using that for example's sake. I would never use that discount array right there. It's just, it makes the example easier to understand. All right. So for an ST, we have our discount array, and then we have a displacement in and a displacement out. Fair value gap in, fair value gap out. That is our ST. So here, that is our last part of our ST right there. Again, for your ST, it's very important to understand. I am not paying attention to a market structure shift. And the beautiful thing about an ST is you don't need a market structure shift. All that you're doing is you're waiting for a fair value gap in and a fair value gap out. That's all you're doing. I'm not even paying attention to a market structure shift. Not at all. It could happen before the market structure shift. It could happen after. You don't need the market structure shift. So you need to unlearn that. You need to unlearn the market structure shift. You don't need it anymore. All right. Perfect. So right here, this is the last part of our ST. That is our fair value gap right there. If we go and look at this leg higher right there. So we have that most recent swing low. This swing low right there was responsible for that fair value gap. That's the reason why I use this swing low. Because we have this fair value gap, and if we zoom out a little bit and we look at market structure, then we look at that swing high and swing low. There's no swing low in between. If there was a swing low in between, I would have used that swing low, but there isn't. So this swing low is responsible for the fair value gap higher. That's important to understand, because when we look at this range from this swing low to that swing high, we have 4 discount arrays. Because if you remember, we defined order flow by discount arrays holding if we want to see bullish order flow. What are discount arrays? Again, then we use the discount array matrix. And the discount array matrix starts off with a mitigation block, so that could be the highest discount array that you first encounter. Then the second one you encounter is usually a breaker, then a fair value gap, then an order block, and then afterwards you have a swing low. That's your last discount array. That's the lowest one. So right here, you have your breaker, which is your first discount array. Then you have your fair value gap, the second one right there. Then you have the third one, the order block right there. And then you have the swing low. And that is your last one. Old highs, old lows, no, we don't use that. Swing low right there, that is your last discount array. So for your PD array matrix or for your order flow, it is important to understand if we are continuing higher, where are we likely continuing higher from? Then we use the first line of defense and the last line of defense, and that is your order flow. So the first line of defense is the first discount array that we encounter. In this case, it's this breaker right there. Then the overlapping PD array is usually somewhere in the middle. It's a fair value gap, always a fair value gap that is overlapping with either an order block, breaker block, mitigation block. That is your overlapping part. So this right there, that fair value gap, that is your overlapping part because it's overlapping with the breaker block, but also overlapping with that order block right there. And then your last line of defense is always a swing low. If I refer to last line of defense in a different sentence or in a different context, then I will mention that. But your last line of defense right there is a swing low. So it's important to understand that we can still sweep that swing low and continue higher, and it would not change order flow. That is important to understand. All right. So again, that comes down if we do sweep it, and sweeping is defined by respecting or disrespecting. And that is something we will touch on in candle signs in the upcoming episode. All right. So I hope that makes sense, and do take note that will make more sense once we get to candle signs. So either one of these discount arrays can be traded into, and once we then have a new displacement higher, again, displacement, fair value gap higher, in the form of that fair value gap higher, ideally above that high right there. That's what you would ideally want. That's again the probability list. If it didn't displace above that high, then it wouldn't be as high probability. All right. So right there, we have a new displacement higher, and that confirms your order flow. So if we define our order flow, and as well, sorry, almost forgot to mention it, it's important that we define order flow by first having the ST, then we come back into a discount array. Once we come back into any discount array right there, and we have a new displacement higher in the form of that fair value gap, that is order flow confirmed. What does order flow confirmed mean? That means that you don't have a 50-50 bias anymore. There can only be arguments to one side of the market, because right here at this moment in time, there is zero bearish arguments. Why? Because we have no bearish order flow established. At this moment in time, when we didn't have that displacement higher yet, we had a 50-50 bias. Unless, and this is where it gets very advanced, where we almost already get into the execution week. So take notes on this, but it will likely not make sense until we get into the execution week. But I do want to mention it because it's a main part of order flow and understanding where to take trades. First off, let me explain which time frames we would be using for our order flow. We have two main different trading plans, and there's no in between. There's nothing else. You either have a filtering process trading plan, so that is a filtering process trading plan, or you have a flow trading plan. It's either one of these two. Filtering process trading plan means that you are using a filtering process because you're looking at multiple instruments before trading that day, and then you filter out the highest probability price action which you will execute on. So you are taking into account multiple analysis on multiple instruments. Then you have a flow trading plan. A flow trading plan, you focus always, every single day, you focus on the same instrument. So for example, a lot of futures traders have a flow trading plan because they constantly focus on ES or NASDAQ. But pick one of them. You either trade NASDAQ or ES and you stick to one instrument only. The reason I'm telling you that is because for different trading plans, in that case, if you're using a filtering process, you would use a 4-hour minimum for your order flow. When I refer to higher time frame, I refer to 4-hour minimum. So that is the 4-hour, the daily, the weekly, and the monthly. That is your higher time frame. Then for a flow trading plan, you could use, and what I would advise to use, you use a 1-hour minimum. So because you're only focusing on one instrument, you can use the 1 hour. But if you're using a filtering process, you always want to use a minimum of 4 hours for your order flow. That is very important to understand. So then that leads me to tell you about that we have a checklist. Because once you understand that, then we have a certain checklist. And this is the checklist that I'm talking about. Right there. This is the checklist that I am talking about. The first one, again, these are 3 options. They are not in a particular order. These are just 3 options. The first one, if, for example, here we are coming off of a PD array already, we only need a 4-hour ST to already get involved. So, for example, again, we will learn to combine the time frames more and more and more. But if we were coming off of a monthly PD array, for example, and we have a 4-hour ST, one singular 4-hour ST, then that can already be a trade itself that we don't execute on the 4-hour itself, but we can go into the 4-hour discount arrays to look for a lower time frame entry pattern. So again, that is me being very clear when we do take this price action. Let me show you an exact example. We have a monthly discount array in the form of that order block right there and that monthly fair value gap. If we go into the 4-hour inside that monthly order block and that monthly fair value gap, then because we could see that the monthly is having what? Bullish order flow. So we only need one 4-hour ST. And inside that 4-hour ST, and the reason I mentioned the 4-hour in the first place is because that is where you go even into the lower time frame as well to confirm it again. So this right there, that discount array right there, that fair value gap, that is a perfect trade opportunity right there to look for higher prices. But you would not enter this straight away off of the 4-hour. You would look at lower time frame. So for example, a 5-minute confirmation right there. So that is important to understand. And the reason that's important to understand, because that is filtering the discount and premium rates that you want to take trades off of. All right. That is important. Again, this is something we will touch on more as well in execution week, of course. Then if we take a look at the list again, the second one is we have a PD array, but not in current order flow. We need an ST plus a RE. Whenever I refer to a RE, the thing I'm referring to is we are just having a new order flow lag higher. What is an order flow lag? An order flow lag higher is when we have a short-term range. A short-term range, what we talked about in market structure, is the exact same as an order flow lag. An order flow lag is the most recent swing low that is responsible for creating that fair value gap to the most recent swing high. Then this right there, that is your order flow lag. Your order flow lag always has a fair value gap in it. The same as your short-term range. Let's define order flow lag and short-term range again. Order flow lag is coming off of a previous discount array and has a fair value gap in the lag higher or lag lower. Or of course, if we're looking at lower prices, then an order flow lag would be it's coming off of a premium array and we have a fair value gap lower in the lag lower, right? the same exact as a short-term range. Short-term range equals order flow lag. All right. So when I do mention ST plus re, it's the ST plus the re higher, which is your order flow lag higher, which is your order flow confirmed. Because remember, once we have that ST and we have that new displacement higher off of a discount array, that is when order flow is confirmed. So everything right there has a mechanical step to it. Then afterwards, I mention in the second sentence as well, PD array, but not in current order flow. Whenever I say that, let's first go over the third one. Not off of PD array, need ST plus re. So when you want to look for trades, and it's off of a PD array, but not in current order flow, you need actual order flow confirmation to look for a low time frame entry there in the 4 hour. If it's not off of a PD array, we need an ST plus a re. So again, we need that order flow confirmed to start looking for trades right there. So if we just have a random ST right there, then we would not look at trades off of that. Unless if this is coming off of a premium array, then this right there could already be where in that fair value gap we look for lower time frame entries. But if that isn't the case, where we don't come off of a premium array, then this is not where we look for entries. We look at entries only when order flow is confirmed. When is order flow confirmed? When we are coming into that fair value gap or any discount array in that lag lower, and we have a new fair value gap lower, right? So that is important to understand. Then a PD array, but not in current order flow. What I mean by that, whenever we are focusing on current order flow, the only thing that we are doing is we are looking at the right side of our chart. We never look at the left side of our chart. And what I mean by that is, if it's not in current order flow, let's determine what is current order flow. Current order flow here at this moment in time, right there, it's neither bearish, neither bullish. It's a bit 50-50, right? So once to confirm order flow, we need to have a new displacement higher that we have right there. Then order flow is 100% on the time frame we are looking at, the daily time frame. It's 100% bullish, meaning current order flow is your most recent order flow lag. That is current order flow. So current order flow to continue higher is either off of that order block, that first line of defense, that fair value gap, or that last line of defense, that swing low. That is your current order flow. Now, then you can understand that all this to the left, this fair value gap, this breaker right there, it is all irrelevant because you are never looking to take trades off of something that is not part of current order flow. If we are coming into that high right there, into that breaker, you are not looking to take trades, to take shorts off of this breaker. Why not? Because it's not part of your current order flow. Because what is part of our current order flow here? What is our most recent order flow lag? Our most recent order flow lag is this lag from this swing low to that swing high. So we only look at buys right there. That is extremely crucial for you to understand, because this shorts from there are extremely low probability. That's very important to understand. So right here, again, just to go over it again in a different example, let me show you one different example as well. This monthly order block, we can see that right here, to continue order flow, we are moving from this discount rate, that order block, that fair value gap, to what? And this is what I mean with PD array to PD array. Because from that PD array, that discount array right there, to that premium array, that is your current order flow. That is where we are continuing higher off of, and that is our target. We have somewhere we are going higher off of, and we have our target right there. Then, if we go into the 4 hour inside that price action, let's actually see if we can sort of skip it like this. A little bit further. Perfect. We have displacement into the discount array. The first thing we are looking for to confirm an ST right now, we have our PD array and we have displacement in. Then the last thing is we need displacement out, which is a fair value gap. Boom, right there. Once this candle closes, once that candle closes right there, that is your ST confirmed. That is your first sign of a potential order flow switch. And then afterwards, we just need to continue higher off of any discount array that is right there. So that can already be this breaker in the form of that, can be this fair value gap right there, or can be that low right there. If we have a new displacement higher off of any of the discount arrays right there, then that is order flow confirmed. And remember, this right there, at the right time, at the right day, can already be a potential discount array that you look for an entry on the lower time frame from. Because remember the checklist, coming off of a PD array, we only need a 4-hour ST to go into the lower time frame. Boom, right there, we have a very small fair value gap in the form of that fair value gap right there. That is order flow now confirmed. And again, you can see the mechanical steps right there, right? PD array, ST, we can define it by ST. And the ST itself already has more definitions to it, right? There's one definition to an ST, but you can define it because you can zoom in on the ST itself and then you see, oh yeah, the ST is PD array to displacement in and displacement out and displacement out, right? That is your ST. After you have your ST, what do you need? You need move into a PD array. So that is your first line of defense, that is your overlapping part, or that is your last line of defense. So either one of those. PD array is your first line of defense, overlapping part, or your last line of defense. And then from that PD array, you need a new displacement higher or lower. So new displacement, new fair value gap, which is again also definable by FVG. So these three parts, the three parts here, the ST itself is definable by having PD array, displacement in, displacement out. The PD array is definable by having the first line of defense, the overlapping part, and the last line of defense. And then displacement is definable by having your fair value gap. So everything is definable. That's important to understand. So right here, order flow now is confirmed. Now order flow is confirmed. And now we have a high probability and we have no bearish arguments to be made. We can only look at buys. We always want to be looking at trading with the higher time frame order flow in our favor. Now, again, that is where combining the time frames comes in, because 4-hour order flow was also bullish here. But when we have a huge move down like this, we can trade this. Yes, we can, because we have, let's actually see this. We have our first fair value gap lower right there. Then we have a second fair value gap low right there. So this already, off of that fair value gap, that is where you can look for low time frame entries. Right there. Then this is also where you can look for low time frame entries to continue lower, to continue the 4-hour bearish order flow. But once we reach that discount rate in the form of that monthly order block with the monthly fair value gap, you would obviously zoom out and be aware of that, because the 4-hour needs to be in context of the time frames above it. Same for the daily, same for the weekly. So the monthly right there is just continuing that bullish order flow it had established right there. That is important for you to understand. So then here, if we go into the 4-hour again, we have what? We have multiple discount arrays that we can look for trades from. Which are the first one, order block right there. Then we have a smaller order block as well right there. And the fair value gap right there. And then the last one is that discount array right there. Voila. Now, of course, those are 4 discount arrays. Which one do we choose to look for trades off of? That is something we will go more into in execution and MFP as well, because that requires news, using news, and requires the day of the week and requires the kill zones. So that is important to already note down, but that will become more clearer over time. Now, I also have written down a question. Is a sweep an order flow switch? No, it's not. And the reason it's not is it's because it's a sweep. A sweep indicates that we are still respecting that low. We are still going higher after sweeping that low, after coming just below that low. If we disrespect that low, then order flow is again unsure. It's uncertain. It's 50-50 again. But right here, order flow is still intact. So respecting, disrespecting, sweeping, not sweeping is something we are going to go into in candle science in the next episode as well. So let me see if right here I have gone over everything, and let me go over just following order flow as well right here. Because when we do keep on following order flow right here, what are we seeing? This is your order flow lag, right? That confirms order flow. Then we have this order flow lag. The same thing as that we did with our short-term ranges. Then we have new order flow lag right there. And then we have new order flow lag. But keeping in mind, we are taking that high. So what do? We zoom out again. And when we zoom out, what are we seeing? We are seeing order flow lag from this low right there. That is your ultimate low. Yes, you have a swing low right there, but I would take that low as well. Then this low to that high, which becomes easier on a monthly time frame to see, because we have this fair value gap and that order block. So then if we see this, we have that monthly order block and that monthly fair value gap right there. And we are continuing monthly order flow higher. This weekly and everything that is above here, everything that is above this discount rate on the monthly. So this order block, that fair value gap, it's low probability. And the reason that's low probability, because the monthly is the stronger magnet. It's the same with if we go into this right there and we have this order block and that fair value gap right there. And if we zoom into the 4 hour, we can see order flow is getting disrespected right there on a 4 hour basis. But the trick is that you don't look too short right there. Because if you do look too short, then you haven't taken into account that the 4 hour needs to be in context of the daily. And the daily needs to be in context of the weekly. And the weekly needs to be in context of the monthly. So the 4 hour right there already needs to be in context of your monthly. The monthly is going higher right there. So monthly order flow is bullish. When monthly order flow is bullish, this is perfect because we have a lot of price action to work with. Then daily right there is also bullish. So would you look at shorts right there? No, you would not. You would not look at shorts right there. You would absolutely not. So right there, it's important to still look at the time frames above it. So that is when the time frame above you needs to be in context, right? The time frame you are trading on needs to be in context of the time frame above it. Always. That is extremely crucial, because if we are going higher, where are we likely going higher from? Off of that daily order block with that daily fair value gap, right? So that is where we will push higher from. So the highest probability price action right there is when we don't have a reason to come lower than that low, because there's no monthly or discount rate hovering below that. There's no weekly discount rate hovering below that. A daily discount rate, yes, there might be, right? But again, that's not relevant because that's all the way to the left. That's not part of your current order flow. Your current order flow could be on a monthly still a little bit lower. But on the daily, that's not part of your current order flow. Because, of course, when we have monthly order flow, then it might only be a couple of candles. But if we zoom out on the daily inside that monthly order flow, then we have a lot more candles to work with. So this huge expansion down right there, that's not a sign of bearish order flow. On the daily time frame, it might be. But if you have it in context of the time frames above you, in context of the monthly, you can see that it's just creating a new opportunity. it's a monthly bullish order flow expansion. That's very important to understand. So again, as well, when we are moving from PD array to PD array, what I mean with that is that we are moving from discount array to that first premium array. Why is that important? Because this right there, from that discount array to that premium array, that is your ideal setup. That is on the lower time frame where you want to get involved before we take out that high. That is where you want to get involved ideally. Then let me see if I went over everything, because there is still a few more things. I have a checklist on the left side of my screen just to make sure I go over everything. We're going to zoom in more now. That's what we went over at the beginning. When does order flow switch? That's what we went over. When is order flow uncertain? That's what we went over as well. Usually when an ST happens, then it's unsure, because bearish order flow when an ST happens gets invalidated, right? Somewhat invalidated. And then it's 50-50. And then when we do have a new order flow leg higher, that's when order flow is confirmed, right? Then only look to the right. No need to use the left. Combine the time frames. That's extremely crucial for you to understand, right? So the same thing here, that once order flow is confirmed here, we have this order flow leg higher right there. This is your order flow leg higher, right? Then this fair value gap is not where you are looking to trade off of. It's not part of your current order flow. It's old order flow. It's used up order flow. It's not part of your current order flow. So you don't look to take trades off of that. All right. You only look to the right. You only basically look at this and you say, all right, if we are going higher, where are we likely going higher from? Discount array, and that is your target. So this is where we're going higher from, and that right there is your target. Then PDA to PDA. Yes, perfect. Which PDA will we tap into? Depends on the news. Oh yeah, perfect. So that is what I want to tell you as well. Which PDA we tap into, or we will tap into. Again, I mentioned it as well. We will go over it more in execution. It depends on the news, depends on the day. We touch on it later. All right. Then defining a higher time frame order flow and which one of the time frames you would need to see it on. We mostly use 4-hour minimum, what we went over as well. Higher time frame is 4-hour minimum. Whenever I refer to the higher time frame, I mean 4-hour minimum. So the PD rates you are looking to trade off of in a filtering process are 4-hour minimum, or in a flow trading plan, 1-hour minimum. All right. Hope that makes sense as well. So you always want to follow order flow, but just following one time frame order flow. So if you're only following order flow on a daily time frame, then that is not as high probability, because you may get blindsided by higher time frame order flow. For example, if we only follow 4-hour order flow right here, then we will get blindsided by that monthly fair value gap and a monthly order block, which is just a continuation, which then we can already tell, all right, this is already an ST, so we can already get involved right there on the lower time frame. That is already a discount rate that we can look for confirmation on. And then we are not getting blindsided, right? So it's having that time frame in context constantly. You constantly have the time frames in context. And believe me, that's not that difficult, because all you're doing is you're just going from the monthly. You're going from the monthly, what is order flow? Bullish. Perfect. Weekly, what is order flow? Bullish. Perfect. Do we have a discount rate to work with? All right, potentially, let me skip to it. Right there, perfect. So if we are continuing higher, then we already have a weekly fair value gap to continue higher off of. That already takes into account that if we go into the daily, that even though if we did have a daily fair value gap right there, it's not as high probability as that weekly fair value gap right there, because weekly fair value gap is a stronger magnet. So the weekly order flow wants to continue right there. Now we can see as well, to give you somewhat of a live example, once this day closes, what do we see? We have a daily fair value gap higher. That daily fair value gap is your new order flow leg right there. So to continue higher, where are we likely continuing higher off of? That daily fair value gap right there. Since we are already coming off of that weekly fair value gap, the weekly discount rate, there's no reason to come back lower on the weekly. There's no reason to come back lower on the monthly, because it's still expanding right there. We still have 3 more days. And then on the 4 hour, there is a reason to come lower right there, because the 4 hour needs to be in the context of the daily right there. So then we could see something like this, and then we continue higher, which is just your daily fair value gap right there. So on the 4 hour, you don't need to look at the 4 hour here. It's not relevant. It's not relevant. All you're doing is you're looking at the daily. You're making it yourself easy. Hard work is always done on the higher time frame. Always. And I believe it's not really hard work. We can't classify it as hard work truly, because once you understand order flow, etc., it becomes very easy to filter out the pairs and instruments that you want to trade and where to trade from, etc. So what you're eyeing for is you always want to trade in alignment with order flow on the higher time frame. Always. Always, always, always. So, and again, I mentioned as well, or I didn't mention, but I've written down here, this is the reason I like fair value gaps, because fair value gaps means that we have order flow to work with. No fair value gaps means low probability price action. For example, if we take a look at EU right now, then we can see there are no fair value gaps lower to work with. The last fair value gap that we had was that one. This is low probability. This is not where you want to get involved in. This is absolutely low probability. So, the things in the notion as well that we mentioned. If we are going higher, where will we likely go higher from? That's what we went over right now. That's your first line of defense. That's your overlapping PD array. That is your last line of defense. Again, the more specifics on that, so even more zooming in, which PD array exactly will we head higher from, that's what we will get into. Invalidation levels is your last line of defense. That's always your invalidation level. But to define that more, we need to take a look at candle signs as well. All right. Then PD array to PD array. That is your context that you're always working with. You're always moving from PD array to PD array. It's the context you are working with. Every time frame, and when I refer to PD array to PD array, I always refer to a PD array to PD array on the same time frame. That's also important. Usually I refer to things on the same time frame. So when I say PD array, discount array to premium array, I'm looking at the same time frame. So not a daily discount to a 1 hour premium. No, that's not what I'm looking at. All right, then every time frame has to be in context of the time frame above it. Perfect, right? Order flow is nearby price action on the respective time frame. What I mean by that is order flow is on the right side of your chart. So this right there on the daily time frame, this is current order flow. Everything that you're seeing to the left is not current order flow. Only 1, 2, 3, 4. Those 4 candles, that is what is current order flow. Only those 4 candles, because this creates the swing low, which is the swing low of the order flow leg. Then we have this fair value gap, which is a 3 candle pattern. And then we create potentially that swing high right there. That is current order flow. Those 4 candles. Nothing else is current order flow based on the daily time frame right there. So you would use nothing. Everything to the left is irrelevant. Every single thing. So just to make sure that you do understand this, because this is very important. So I don't want to see anyone taking random trades from the left. Again, in very certain, very specific conditions, like a Thank God It's Friday, that is when we do sometimes do it. But that is very specific. That is a trading plan on its own. That is something we will get into. Don't worry. Only this is current order flow. This is literally the only thing that you need to worry about. Because all you need right there is that discount rate that we are heading higher from. It's all you need. This is all you need. As funny as it sounds. The other things are just distraction. Because if we just zoom out, then we have the same thing. All you need right here, well, when we were right here, all we needed was this right here. It was this. This is all we needed. That is current order flow on the weekly. And then the daily needs to be in context of the weekly. That's all we needed right there. And you can see why this price action was so beautiful, because order flow was in context of the time frames above it. It was beautiful. It was super high probability. Then what is order flow? first line of defense, etc. I think we went over it as well, right? Order flow, very defined, is discount erase holding for bullish order flow, bearish order flow, premium erase holding. But again, if we define the discount erase and premium erase matrix, etc., then we get to our first line of defense, overlapping PD array, and our last line of defense. Excuse me, my voice is almost gone. Where would order flow get invalidated? Last line of defense, right? And again, then to define that more, we need to talk about candle signs first. What are early signs of order flow getting invalidated? That is where candle signs comes in. So save that question for tomorrow. All right. How are we moving from higher time frame premium to higher time frame discount and vice versa? What we mentioned as well. Whenever we are moving from discount array to premium array, then we will seek another discount array to new premium array. So we're constantly moving from premium, discount, premium, discount, premium, discount, constantly ping-ponging in between that on the same time frame. That's important, all right? All right, I said all right very often today. I just hope it's very clear. This is order flow, and this is the main things about order flow. Again, if I do have different insights, then of course you will hear them from me. No worries at all. All right, study this. And tomorrow we will go over candle signs. All right, perfect. Thank you.